Welcome to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Here's your host, Grant Bledsoe.
Hello, everybody. Grant Bledsoe here. Welcome back to Grow Money Business. This week on the podcast, my guest is Pat Duffy. Pat is the co-founder of The Giving Block, which is an organization that was launched to match nonprofits with donors of appreciated crypto assets. That phrase might sound like a whole lot of nonsense to a lot of you out there, but I assure you that it is not, and it is an exceptionally valuable tool that they have created. Here's why. If you're someone who buys $100 worth of Apple stock and then that stock goes up to $500, you might decide that you want to give $500 to charity at some point in the future. But if you sell the $500 of Apple stock, you, my friend, have a $400 taxable capital gain on your hands. If you pay taxes on it, then the nonprofit is going to get less of a donation than if you just give the shares of Apple to a nonprofit organization in the first place. You avoid that taxable capital gain. You avoid paying the tax entirely. The nonprofit is then able to sell the shares tax-free, being a nonprofit, and they get the full $500 donation. Well, a lot of people around the country and the world have very highly appreciated positions of crypto assets these days, and Pat and his co-founder have created this platform that matches donors of appreciated crypto assets to nonprofits, because a few years ago, nonprofits just weren't situated and able to accept crypto donations in the first place. So Pat's organization helps both sides. They were launched in 2018. They've only been around for about 4 years. They already have 1,400 nonprofit organizations on their platform. They're growing very quickly. They've just sold some of the equity to a larger company. It's a very exciting and fast-growing thing that they're doing. Pat's a really smart guy. I really enjoyed talking with him, and I'm really appreciative of all the work he's doing because I truly think it does a lot of good things in the world. We had a great conversation. I hope you enjoy it as well. Hey, everybody. Real quick before we jump into today's episode, I have been advised by my attorneys to remind you all that none of what you might hear in today or any other episode of Grow Money Business is financial, investing, tax, legal, fitness, or even relationship advice. It's content that you're free to use and deploy on your own terms. And before you take any actions on what we might cover in the show, I really encourage you to consult with your accountant, attorney, or financial planner. If you don't have a financial planner and think that you might need one, be sure to check out threeoakswealth.com to learn more about my firm's planning, advice, and investment services. Pat Duffy, welcome to the podcast. Thank you for being here.
Yeah, thanks for having me.
So you are one of the co-founders of an organization called The Giving Block. And this came on my radar because you guys are doing something that I think is really cool in my seat as a financial planner. But I don't want to put words in your mouth. Why don't we start? Could you describe what The Giving Block is and what you guys are doing?
Yeah, the short of it is we are the main solution provider for the subject of crypto philanthropy. So we meet the needs of donors on the crypto side and nonprofits on the charitable side. So technical solutions and support services, resources for the nonprofits. And then on the donor side, very similar. We have like private client services for fringe cases, a network of advisors. But long story short, we make it easy for nonprofits to take crypto and crypto users to give it.
And why do we care about that? If you have any kind of cryptocurrency assets, why is that important?
Yeah, on the donor side, it's uniquely important for these conversations to have, just because crypto users don't normally have advisors to the same degree that folks who invest in more traditional assets do. They're kind of flying solo, learning tax implications on the fly. They also have hodl culture, so they're used to never sending their crypto anywhere, just stacking it as much as they can. The short of it is when you give non-cash assets, stocks, house, cars, and then of course crypto, any property asset, you don't just get the write-off you normally get, but you pay no cap gains on it. So if you're a donor with $1 million in cash and $1 million in Bitcoin, you're thinking about giving $1 million to a charity. When you give Bitcoin directly or any cryptocurrency, you're not only getting that $1 million write-off potential, but you're erasing up to 300 grand in state and federal cap gains tax on top of it. So enormous tax incentive. And then, of course, a lot of donors will use it as a tax arbitrage opportunity, take the cash they would have donated, rebuy their crypto position. Now they have the same amount of crypto they normally would have had, but they just erased 300 grand in tax liability.
Yep. I follow exactly what you said, and I think all those strategies are super cool. But I'm going to slow it down for just a moment to make sure everybody gets all of it. So a lot of people who own crypto assets who've been accumulating positions over the last few years. Crypto has kind of gone bananas over the last few years, and you might be in a position where you have a lot of assets. And so you use the number of $1 million. So if you have $1 million in Bitcoin and Ethereum and whatever, and you only paid $100,000 for those positions over the last few years, if you sold the $1 million of crypto assets, you have a $900,000 capital gain on your hands. And when you sell that, you'll owe capital gains taxes to the IRS, either 15 or 20%, really 23.8% with the Medicare surcharge, plus potentially state income taxes depending on where you live. And that's a big chunk of change. And so if you're someone who's hodled, as you've put it, and held on for dear life, never sold, and the price is appreciated, now you have one of these big positions, you probably don't want to sell and fork over all that money to the government. And so one really cool mechanism that works with any asset that's not treated as cash by the IRS, this could be stocks, bonds, houses, anything, crypto assets, obviously, is you can give them to charity and get a write-off for 100% of the value without selling and triggering that capital gains tax. And that in and of itself is a really, really powerful way to give to charity and mitigate taxes at the same time. And because more and more people around the country are accumulating these really appreciated positions, that's where this kind of thing comes into play. And you mentioned in passing a few more advanced strategies that I do want to get into. What happens when you give? So somebody's interested in this. You guys are one of the first platforms to enable a philanthropic tax-deductible gift of your crypto assets. When you sign up, you give your crypto to the platform. What happens next? How does walk us through the process here?
Yeah, one quick add-on just to what you were covering, because I know donors sometimes get confused about this. The charity doesn't pay taxes either, because I know some people are like, well, that's great for me, but now it's like, no, charities are tax exempt, so they get the full value, just as one point of clarification. But yeah, the process from our side, we're actually not the first company. A lot of people think we are just because of market share. But we pretty much just came in and asked all the nonprofits who accepted and people who gave it what they needed, and just kind of built a better mousetrap. But generally what happens is, like, if you're a donor who wants to give, you're either giving through our widget. For normal donations, if you have a really big donation or a complex donation, say a small cap crypto, where you're trying to transfer an NFT directly to a nonprofit, because of the additional, liquidity needs, or you're doing something OTC, or it's such a large donation, you don't want to move books and reduce the deal value. Like, a lot of considerations, in addition to needing advisors, let's say, an appraisal, whatever else it might be, just getting boxes checked for you because you're kind of a high value donor, you have a really interesting situation. Then we have what's called private client services. But let's start with the widget example. What happens with our widget is either it's going through a DAF partner, like a third party, who pretty much gives you that same nonprofit tax incentive, and then cashes out of the crypto for nonprofits and sends them dollars. Or the nonprofit is accepting the crypto directly, and then either we have a program running to automatically liquidate it, or they're holding the crypto they receive. That last option is actually pretty rare. The nonprofits hold the crypto they receive. Even the ones who invest into crypto as a part of their endowment or treasury management tend to liquidate gifts and then make deliberate investment decisions around the crypto they buy into. So in short, it's cashing out for the nonprofit the vast majority of the time. Then they take that money and apply it to their mission.
Right. And so that concept that you began with there, the difference between giving directly to a charity and going through a DAF, which is an acronym for donor advised funds, is something I want to dig into as well. Because a lot of people, so we for example, we had a client who was in the tech industry, their business sold, and they came into a lot of money last year. One of the things that they wanted to do was give some of that money to a local organization that was rather small, but they had friends
Hmm.
in that was directing the organization. They didn't, if you give like $100,000 to one of these really small nonprofit organizations, it's really easy to overwhelm the organization. And so one thing that they wanted to do was get the deduction in year one, but space out their charitable contributions so they don't overwhelm the organization over the subsequent few years. And that's really one of the biggest benefits of what's called a donor advised fund. You give your assets to this fund, you get 100% of the deduction in year one. And there are some limitations around if it's not cash, maybe you have to spread out the deduction a little bit, but you get to claim a lot of it in year one, and then you can space out the donation to the charity thereafter. So how does, you mentioned that goes through some kind of intermediary at the giving block? How does that work when somebody goes through a DAF?
Yeah, people, again, there's private client services is what it is for any situation where a donor's like, I don't want to just send the money through the widget right now. Like I have some alternative use case, including needing a donor advised fund set up. We work with a organization called Renaissance Charitable. They rebranded to Ren recently. And they deal with complex asset giving. So they've just been kind of a staple of the nonprofit industry for forever on the donor and the nonprofit side. So like they're the type of org when someone owns 1,000 acres of land and they're donating like corn silos to a hospital network. Like they take care of those sorts of things. So we've developed NFT related acceptance policies and small cap cryptos on exchange accounts that not every nonprofit really needs to be opening or plugging into their systems. And what we would do if a donor wants to give through a donor advised fund account is it would just be in connection with us, Renaissance Charitable, to set up the account, and then whatever advisors that donor has, plus whatever advisors they need, say someone to do the appraisal and the other steps to close out of the transaction. Ren would just be setting up that account for them, and then they're able to accept any type of crypto transaction into the series of accounts that we've set up for the process for acceptance. And then on the advisory piece, like what they then need to do in terms of issuing that out to different charities, Ren can help with distribution to any nonprofit where the funds need to go.
Sure. That makes a lot of sense. Now, if you want your donation to go to like the American Cancer Society or something like that, you may not have any need to space it out, and giving directly to that charity all through one simple transaction may be the path of least resistance too. But it's nice to have that
Yeah.
functionality.
The one additional example, which would be you want to space out your giving, but not through a donor advised fund or through more complex vehicles, is dollar cost averaging, similar to making purchase decisions. So a lot of people dollar cost average into their buys. A lot of donors now, especially 7-8 figure donors who use our platforms, they're starting to get into this practice of dollar cost averaging their donations to maximize the ultimate, or on average, of course, maximize the tax benefits of their gift, rather than trying to time the market, similar to the way you would invest. So that same thing, you could just send a donation through the widget, once a month or whatever your dollar cost averaging strategy is. The other thing is you can obviously just pull, I shouldn't say opposite, you can pull a wallet address by checking out through the widget one time, and then you can white list it in your account. And then you won't even have to go back to the widget. It connects to the email that you submitted through our system. So without even leaving your Gemini, Kraken, Coinbase account, whatever it might be, you can just keep issuing donations to that charity and keep receiving automated tax receipts to the email you connect.
Oh, very nice. I see. Okay. So how did this all get started? How long have you been building this, and where did the ideas come from?
Yeah, 2018, which feels like an infinite amount of time ago. So this story pretty much went that Alex, my co-founder, got me into trading crypto, and I got him into nonprofits. I was working at a nonprofit. I was very kind of Dan Pallotta overhead myth type person. Like, was always kind of angry that platforms didn't have like group nonprofit selection. Like certain donor behaviors were incentivized. You always had to pick an individual nonprofit, and nonprofits were kind of selected based on transparency versus efficiency or innovation. So we had very strong beliefs about like platform development and what would work best in the nonprofit sector. We both just really liked trading crypto. And then end of 2017, Pineapple Fund, Ash and Coach are donating on Ellen. We just saw some big donations popping off. And we saw that there were, a few dozen nonprofits who seemed to be like trying to get crypto. Almost none of them got it. And then the charities who were getting donations weren't equipped to accept it. And they were just either ending up with headaches, or a donor would have them set up a wallet and then the charity would sit on this money as it slowly lost value. They're waiting for an exchange account to be open so they can actually liquidate. The market was dumping in early 2018. So we just watched a lot of nonprofits who were really interested in crypto, not able to fundraise it effectively. And then other nonprofits get money dumped on them, which was great. But they weren't really able to process it effectively, and it was eating into their headspace and their other activities. So we just talked to probably, low 30s type nonprofits. We would just get in the room with any nonprofit we could and just drill down on, from a technical standpoint, what are the things that aren't automated, what's not working, what would be helpful. And then it was a lot of kind of consultancy type stuff, like updating a gift acceptance policy, accounting processes, having a network of advisors and accountants and appraisers who could do crypto specific problem solving, and then support at the exchanges. Of course, every charity and donor was ending up in crypto specific solutions that couldn't answer donor questions or nonprofit questions effectively. And we just started kind of spinning up the technical solution and the support system and the resources and the training, and just put together a solution that was, in 2019, we had 12 nonprofits. 2020, we hit over 100. Last year, we hit 1,200. And today, we're about 1,400 clients that are using the platform.
So from the nonprofits perspective, you mentioned that, back in when this thing started, 2018, few years ago, nonprofits wanted to take crypto, but were unsuccessful for a variety of reasons. Do they want to take crypto because they know that there's money in there and they know that it's beneficial from a donor's perspective? It's a potentially a nice source of building of fundraising, or are there other reasons that they might want to take crypto as well? Is it simply a donation standpoint?
It's a great question. The nonprofits who treat it and the solution providers who treat it like a donation method versus a donor demographic have never been successful, which is eventually they will be. Eventually it'll become like credit cards, and it's really just you're toggling from one option to another. But that's not the way it works now. Like, there's a giant pool of crypto users who are like culturally tied to crypto and then need very different calls to action, tax incentive education. The ways they give are more complex and interesting. NFT acceptance. There's all this stuff that needs to be accommodated. But the bigger piece that we saw as an opportunity was like nonprofits could, and recognize that they could, like, get younger with crypto, get more innovative, meet these interesting people. The donors are high net worth. They're culturally interesting and tech savvy and hitting their peak earning years. And, 83% of millennial millionaires are like investing this way. So it's like, there's a cultural sort of transformative aspect where it's like you can actively turn crypto into a sustainable and transformative revenue channel at a nonprofit, which is like what we were interested in, versus just plopping this on every nonprofit site, having them think about it like credit cards. And if one nonprofit crushed it, then we'd be successful as a solution provider. Like, we wanted to work with nonprofits who were interested in becoming a part of this crypto thing, because that's great for crypto adoption and it's exciting for the space. And it's great for the nonprofits because it's empowering. I know it's kind of counterintuitive for donors sometimes. It's like, why do we need a company and consulting and strategies and all this stuff? It's like, because you see the American Cancer Society like tweeting about Doge and going on podcasts and webinars and running crypto specific campaigns like Hodl Hope at Save the Children, partnering with exchanges, running NFT drops and fundraisers. Like, bringing those two communities together was important for us. And now we have, hundreds, close to being over 1,000 of what we would call like hyper successful crypto philanthropy programs.
Yeah. So what are the biggest barriers from the nonprofit's standpoint of going down this path and beginning to accept crypto? It seems like it's requires a lot of bureaucratic change, and I kind of liken it to the retirement plan space. Like, we were talking about this in my office this morning. 403B plans are very similar to 401k plans, and they're primarily what like school districts across the country use, and they're ancient and they're awful structures for teachers and members of the unions and the participants, but they're just ingrained because the bureaucratic changes that need to happen to make any kind of improvements are really, really time and energy intensive, and it's just hard to do anything. So from a nonprofit
Yeah.
standpoint, I suspect that you probably have to go to the board and have some formal changes approved to just be like get the thumbs up on it in the first place, and then you've got the logistics behind that. What does that really look like from their perspective?
Yeah, it's a really good question. And it's like important to flag for if there's people on the line right now who are like really into crypto that like ROI and revenue are very different things. ROI is super important to nonprofits, but like that has to do with time and energy and resource investment. Um, there's two things, right? There's how do you get into it if you want to get into it, what are the steps? But then there's also the trappings of crypto, right? A lot of shiny objects, a lot of things you can try that are time and labor intensive and take away from other parts of a nonprofit's mission, building a blockchain patient registry or like starting to mint their own NFTs. There are kind of lottery ticket type trappings once you're even in the space. So there's two areas of there's risk to your time and energy in setting it up the wrong way, as well as compliance risks. And then there's risk to time and energy once you're already set up in terms of just taking low ROI, high bandwidth actions. We focus on both of those. For a nonprofit who wants to get into it, the two questions that we ask, like when they're trying to join our platform, is like, are you good at fundraising and are you good at the internet? And if the answer is true to or yes to both of those, then you're going to be fine. Like when it comes to crypto, it's updating your gift acceptance policy. It's opening an exchange account instead of a wallet. That when a donor says, "I gave $1 million to the Red Cross or wherever it might be," the IRS goes, "Prove it." You can't. The account has documentation versus you send it to a wallet somewhere. It's like there's no documents that say this is formally tied to any institution. So there's little things like that. But in short, it's the same process as opening a bank account. They fill out an app. We tie an account to the nonprofit's EIN, and then everything else is just getting organizational readiness in place. Gift acceptance policy, accounting practices, FAQs for their donors to reduce emails coming in, activation strategies that work with their existing skill set. So they're not trying to figure out Twitter for the first 6 months when they've never done that before. From a compliance standpoint, the account and the setup mostly takes care of itself. It's just a willingness to learn, and then an actual critical lens, like, are we in a position to do this if our website isn't even search engine optimized or mobile optimized, for instance? Like the answer is probably no.
Interesting. So it seems like an absolute no-brainer from a nonprofit's perspective, because one of the biggest barriers that I think most of larger corporations throughout corporate America have in dealing in crypto and investing heavily in crypto is, yeah, you don't want to pay the taxes, but also you don't want to take market risk on top of the compliance, right? I'm in the financial industry. I came from a big brokerage firm earlier in my career. And I know for a fact that most of the brokerage firms don't want to take a whole lot of market risk with crypto. And the compliance headaches around offering that to their clients are really, really onerous. But from the nonprofit's perspective, I mean, yeah, you have some minor compliance requirements, but if you're receiving the gift and then you're liquidating it immediately, even as you put it, if you have an allocation to crypto in the foundation's portfolio, that's one thing, but there's no tax ramification. You could accept the gift and then just blow out of it immediately. So it seems like those operational barriers and headaches are well worth the or it's they're small hurdles in the grand scheme of things. And you guys' growth would
Yeah.
be a good testament to that, right?
Yeah, if you are a mid-sized or large nonprofit, then almost 100% of the time, like you should absolutely be at the very least accepting it. And again, to your point, you don't have to hold it. You don't have to make investment decisions. You don't have to deal with price volatility. You don't have to send it anywhere and do a cash distribute. Like a lot of nonprofits think crypto is NFT minting and everything else. You can just really go through the process of what's like opening a bank account with us. And then you just want to make sure that you have the support infrastructure in place. Like you don't want to do it. You don't want to go solo into it because you can have the account right, but then a donor is going to try to send you an NFT to like a dynamic wallet address. They're going to set $1 million on fire. So like you don't want to reinvent the wheel in the same way you wouldn't like build your own Wi-Fi router. But like if you want one, it's super accessible now at this point through like a company like ourselves to get set up. The bigger risk and what nonprofits need to be concerned about is overextending, which is usually smaller nonprofits. They're trying to use crypto kind of like a lottery ticket. And sometimes donors will get these really small nonprofits in because they think it's fun and exciting. And they forget that like every hour you're putting into crypto isn't going somewhere else. That's really more the trap. And that's usually on the smaller nonprofit side.
Hmm. How would you scope and define that? What do you consider a small nonprofit versus a mid-size versus a large?
For us, it's like if the nonprofit's below $1 million, we ask additional follow-up questions, like $1 million a year, just to figure out, like, again, like, are you good at fundraising and good at the internet in some baseline way? Like, if
A
you don't
million
really have a
dollars of
fundraising,
revenue or a million of what?
oh yeah, $1 million in annual revenue. Um,
Gotcha.
then we'll just try to figure out. Pretty much, you can tell pretty quickly if the nonprofit's like looking for a lottery ticket and it's kind of a shiny object and a distraction. Um, but it's really some of our best performing nonprofits are really small. Like Orangutan Outreach, for instance, was $500,000 a year organization, and they raised over $1 million last year in just crypto. So tripled their budget with crypto fundraising. That's obviously an anomaly. It's not like every org that size can do that. But like they knew how to use Twitter and the internet. The founder was really into NFTs and could engage projects. Like it was through like a needs assessment and opportunities assessment when we first had a convo with them. It's like this is well aligned and with limited energy and new learnings. Like this is obviously high upside. So small nonprofits need to be careful, and then large nonprofits have the resources, and the upside is so high that they should almost universally be getting into it.
Yeah, yeah. So with large nonprofits across the country, how what portion of I guess what portion of nonprofits across the country are accepting crypto now, if you had to guess?
Yeah, it's tough to get it down to a percentage, but like if you go to just our website, most of our nonprofits are public. They're listed on the crowdfunding platform, but just like off the top of my head, like clients we have are St. Jude, Save the Children, International Medical Corps, PETA, American Cancer Society, United Way Worldwide, World Vision, um, universities like UNC and Alabama. Like you can go across like the big ones. We have almost 100 nonprofits that are $100 million or more, and I think we have maybe a little over a dozen that are $1 billion or more. So at the high end, it's becoming like pretty common. Like when you think about the big brands, the big logos people are used to seeing, like I wouldn't say the majority of them are on our platform, but it's like a big, like kind of heaping handful of the top brands you would expect to see are already into this and building, 7, 8 figure programs pretty normally. And then the majority of clients we serve, there are small and mid-sized organizations. But I think our average client size is something like 50 million, but that gets anchored up. We probably have, I'd have to look what the numbers are, but of course, like hundreds of organizations that are closer to that small end, but it's only if they seem like they're in a position to fundraise effectively.
Sure, that makes sense. So back to how you guys got started, I really like the story of you just go around and talk to 20 or 30 of these people and get a feel for their challenges, their needs. That's such a ubiquitous strategy across all industries. If you're looking to find a solution and add value and solve someone's needs in an entrepreneurial way, that is the best way to do it. And you can even make money while you're doing it, doing some kind of consulting. Uh, was it easy getting in to have those conversations with people? Are they actively looking for help?
No, it was exhausting. Yeah, so we had to just keep rebuilding a Wix site and decks and having like wine and cheese things in DC and trying to get people in to just talk to us for like a while. And it took because you don't know enough at the beginning. Like you want to be someone who knows enough. And then, it took Alex and myself a while to each get to, 10,000 hours of crypto philanthropy, like the Malcolm Gladwell thing, which we're both like well past at this point. But in the early days, you're just really like, you want to learn from somebody and some people like having that conversation and taking the time, but like they know you're not going to add that much value to begin with. So like the first big break for us was Save the Children and Ettore over on that team. By the time we met him, it was like kind of right at the nexus of us becoming expert enough to walk in with the 5 or 6 things that are like clear value adds. So we knew what was going on with him well enough. And he was into crypto enough to see like how plugged in we were and how much energy we were pouring in. And he was kind of at his organization doing a lot of crypto fundraising efforts, but on an island. And for them, it was just like they have the resources. They've been accepting crypto, I think, since like 2014 or something, maybe even 2013, and like no real traction. And they knew it was out there. So they just gave us a shot to connect the dots for them and turn it into a revenue stream. And we just, gutted it out, tried a lot of stuff, put in way more hours than was respective of our contract with them at the time being. Started getting some traction and took it from there. But Save the Children was our big break for sure.
Very cool. Is the Giving Block itself a nonprofit?
The Giving Block is a for-profit company. So we're like a solution provider for nonprofits. It's almost like a mix between, we've developed like the GoFundMe for crypto just because we have the main crowdfunding platform. And then we also have like the Blackbaud, Classy, etc., like solution provider of crypto for the nonprofit sector. And then we also do kind of like the Benevity, Bright Funds. This doesn't mean anything to people outside of the sector, but the companies that do like corporate giving. So working with for-profit companies in crypto to build CSR programs and campaigns, run donations. And then the last things were like the Giving Tuesday Foundation of crypto, because we built out the main campaigns, the Crypto Giving Pledge, Crypto Giving Tuesday, NF Tuesday, like the industry staple giving opportunities and campaigns. So like the connective tissue and fabric. But yeah, we make money working with nonprofits, helping them drive in revenue and make crypto sustainable. So we focus on nonprofits that can actively kind of control their own destiny and fundraise crypto. And then on the donor side, we just help when a donor needs to give to a nonprofit that's not like an active program. We accommodate those as well and like help them execute that transfer, liquidate it, get it out through our DAF partners. But we're really focused on getting the nonprofit sector into crypto in a much more active way.
I see. So how are you making money specifically? Is it like a consulting contract with each of the nonprofits, or is it some kind of commission on the transactions? How does that work?
Yeah, it's a hybrid model based on the way they fundraise, more or less. So it's a subscription usually. So the nonprofit based on how much stuff they need from us over the course of a year. So that subscription, usually it's like $2,500 for an annual period. And then the processing fees are dependent on like how actively we're fundraising. So for like a big donor advised fund program, it's like they're not running campaigns and crowdfunding. So the fees are like relatively low. It's more like we're just a processor. And then for nonprofits, when we're like running campaigns for them, like fees can run up to between us and the exchange, and then like third party partners, like there's a DAF or whatever involved. Our maximum fee level would be 5%.
Gotcha. So what's on your agenda, right? Like, what are you guys working on right now? I mean, you've only been around for 4 years. You're at 1,400 nonprofits. What's on your plate at the moment?
Yeah, it's a great question. It's a lot of, from a product development standpoint, like a big thing we're working on are these impact index funds. We kind of talked about it early on, but like every giving platform kind of forces donors to give to one nonprofit and just pick one, which we historically, that's how we started, just because that's the only way to set it up. We have these impact index funds that are just collections of nonprofits that we support based on their NTE codes, pretty much their impact areas. We're building these out and pouring more resources into making them customizable, more or less, for donors. So we're moving in this direction where donors will be able to, based on the parameters of the types of nonprofits they'd like to support, have it be kind of a bucket of them that they can then save and support and fundraise for, which I think is an important move for the industry, just because we have this effective altruism lens where every donor tries to pick the winner, like the best nonprofit at one particular thing. And we know in the for-profit sector, when you do that with investing, I think it's something like 90-95% of active traders lose to index funds. The same is almost certainly true for the nonprofit sector. And most good ideas never make it out of certain charities because they don't have the branding or the reach or whatever else it might be. So we're trying to encourage that sort of behavior, more like index fund investing, but in giving. So that's like a big product thing we're doing. And then we're working with Shift4 now on a really big crypto philanthropy campaign with match dollars and cool stuff going down starting on Tuesday of next week. We're going to be running it as a series all throughout this year and hopefully next year as well. So we'll just keep having companies and partners putting match dollars in, helping, double, triple donor dollars that are coming through. And then guess the last thing would be institutional. So the head of crypto at Fidelity Charitable joined our company a few weeks ago, formally, to head
Nice.
up our institutional arm. So yeah, on the nonprofit side, donor advised funds, universities, foundations, community foundations, family foundations, stuff like that. We're going to be working with them a lot more actively. And then on the donor side, the private client services are going to get a lot more sophisticated. Like anyone who wants to give $10 million in crypto, we're going to have, we already do have, I think, in our opinion, like the most white glove service just because it's end to end, but we're going to make it a lot more distinctive.
Who are your competitors? Who else out there is doing this? You mentioned earlier you're not the first. What are the other
Yeah.
platforms and where are they at?
Before us, there was mainly nonprofits going to regular crypto payment solutions or exchanges, kind of direct. So in the early days, it was more like a BitPay or a BTC Pay server, or exchanges like Coinbase or Gemini directly. Usually that was kind of donor driven, I think, for the most part, trying to encourage nonprofits to like get on those platforms to try to like reduce fees, and just kind of like maximize the total donation amount going through. But obviously then the nonprofit is getting the regular Coinbase support team or whatever. So that was kind of an easy thing for us to get past, because every nonprofit was like, how do we update our gift acceptance policy? And some guy in the Coinbase team was like, get out of here. I have no idea what you're talking about.
Sure.
And then today it's a blend of that. So some nonprofits are still trying to like build their own thing, like using direct relationships with companies, which generally speaking doesn't work out. They just kind of get a dead year, like a lost year of crypto. And then we made a lot of those groups on the back end. And then the other side is like people trying to, they're setting up nonprofits to take crypto with like nonprofit specific solutions, but treating it more like a donation method versus a donor demographic. So like that's like our main narrativized competition, I guess, where it just be like someone like an Ingiven or I'm trying to think what would be another example. Endowments is not a competitor; they're like a partner company.
Mm-hmm.
They help people who want to give ETH into a donor advised fund specifically. But yeah, for the most part, it's like setting up nonprofits to accept a crypto gift more or less with like a baseline technical solution, which I think eventually, maybe 3 or 4 years from now, that's what we'll look like and other companies will look like. But for the time being, in terms of like helping nonprofits fundraise crypto in addition to a technical solution, we would be the only one taking that approach. And we'll, I guess, like see how that works out.
Sure. So let me ask you this then. You have the nonprofits on one side, you have the donors on the other. The analogy I think of is how a bank operates. A bank accepts deposits from depositors through checking and savings accounts, and then they take that money and they lend it out to people to go buy cars and put stuff on their credit cards and that kind of thing. And they make money between the spread on the interest between what you're paying depositors and what you're getting off of the loans. And if you're managing a bank, there's always this, if you're trying to grow the balance sheet and the income statement of the bank, there's always this chicken and the egg trade-off. Do you go out there and look for more loans, or do you go out there and find some more people to open checking accounts so you have more cash to go lend? And I see a similar issue for you guys. You have the nonprofits who want money, you have the donors who want to give it for tax treatment. There's symbiosis between those two things. How do you guys? Is that an adequate analogy? Is that a challenge for you? Where's the bottleneck, and how do you manage it?
Yeah, that bottleneck exists for people treating it like a payment method. So like if you're just setting up more and more nonprofits onto a list of nonprofits to accept donations, and they just sit there as an option for donors. So like donor empowerment, no nonprofit empowerment, very similar, just like regular payment methods, then yes, there is nothing about that increases the volume going to charities. But like the nonprofits we work with actively fundraise it. They grow their donor audience slowly over time. They activate, they partner with companies, they run campaigns with us. We grow the giving pledge. Like the bigger our client pool grows and the more we activate as a larger voice, like the more donors we educate on the tax incentive, the larger the volume becomes each year. Our volume has always dramatically outpaced our nonprofit growth, even though we've like 10x'd pretty consistently on the nonprofit side. like our volume has always gone up dramatically more. So we went from like 4.2 million 2 years ago to 70 million last year. That's just the crowdfunding platform. And then like the institutional side, like the biggest DAF partner had $330 million in crypto donations last year. So the space is growing really quickly. Like there's still so many people pouring into crypto, so many people with tax incentives, and so many people to be educated on that and to be brought in as first-time crypto donors. A nonprofit voice in this ecosystem creates more volume than it does like take another slice of the pie, because we don't do it the passive way. Like they're very generative.
Sure. Yeah. So it's all self-reinforcing on either side. You add a list, somebody to the list on the nonprofit side, but you don't take on any more donors. Well, that nonprofit announces that they're on the platform through their social media feeds, and that brings in more donors on the other side as well, and vice versa too.
Yeah.
Right.
And we work on the donor side too. Yeah. The vice versa piece. So like my team works like exhaustively on turning the crypto community into like one of the strongest forces for good, like increasing charitable giving, increasing opportunities, running campaigns, creating pledges, plugging in charitable fundraising stuff into every crypto conference, and like growing the degree to which the crypto community is a force for good and donating into the nonprofit sector. And then we're also the main source of getting nonprofits to actively fundraise it, like turning nonprofits not into crypto acceptors, but like pro crypto forces, which is obviously great for mainstream crypto adoption. So we're trying to make nonprofits an incredibly powerful force on crypto adoption and growth. And then we're trying to make the crypto community like one of the better, if not the strongest growing force of like nonprofit sector growth and impact. And if we just keep working on those two sides of the fence, they complement each other really nicely.
Sure. So what does the vision look like? I mean, what are you guys focused on like 5 years out?
It's a great question. Long term, crypto philanthropy, I think I kind of touched on it, but it unlocks mainstream crypto adoption. Like no one is spending stock at a baseball game to like buy a hot dog and triggering taxable events. I feel like people have been confused about crypto payments adoption until we see more stablecoin accounts. If people are sitting in stablecoins, earning interest, treating it more like their bank account and invoicing out of it, then sure, we'll see crypto payments that are like using blockchain but pegged to a fiat currency. That will be more of like a payments use case. So like the rise of yield earning platforms and high interest accounts and the ability to invoice out of them, like we'll see more for-profit payments adoption. But the nonprofit sector in the short term is like the biggest growth area. Like every nonprofit, for the most part, other than again small ones who we think would get pretty distracted, should be accepting it. It's very obvious. And then anyone who has cryptocurrency who supports nonprofits, it would be silly to not give that way, right? Just because you're just throwing away money if you give dollars. So like that's very strong and true. So if we can max that out and make it very mainstream, we would have for the first time like a full sector acceptance of crypto, and then like some of the biggest trusted brands. So like that's our North Star first and foremost, like drive crypto philanthropy, turn it into the biggest force for mainstream crypto adoption, which we absolutely think it can be. And then beyond that, like as stablecoin adoption, everything else overlaps. Like our work with Shift4 will be working with every major crypto company worth its salt to plug it into their ecosystem and allow restaurants, casinos, retail, stadiums, hotels, all of these areas that Shift4 covers. They do 200 billion in payments volume a year, bringing crypto across all of those sectors in partnership with every major crypto exchange, payment solution, et cetera, getting that plugged into the ecosystem on the for-profit side, kind of timing that up with mainstream stablecoin adoption.
So I would venture to guess that most of the people listening to this are somewhat familiar with crypto stuff, but not intimately familiar with the ecosystem. And you're going to laugh when I ask you this, but what is Shift4? That's not something I've heard of in the past.
No, Shift4 is new to crypto. So we got acquired by Shift4 like within the last 2 weeks. So it's like it's not an acquisition the way that people outside of like M&A think of it. People think you just like hand over the keys to the shop and then they just slowly strip you down for parts. Like this is Shift4 is interested in two things. They want to become like like the main kind of payment solution in the nonprofit space, plugging into all of the solution providers. So you can think like the Blackbauds and everyone out there, like they want to, um, move into all of those companies and just provide better solutions. So like the nonprofit sector is something they want to move into. They did a $243 million fundraiser for St. Jude last year. Jared, their CEO, is the guy who piloted, if you saw it, the first civilian space flight. And then he raised $243 million for St. Jude. They had like the Netflix thing on him. He pretty much, their company came to us and they were like, we want to, one, lead nonprofit sector payments innovation. We think crypto is the most innovative piece. And then if we just keep heading in this direction, adding stuff in, like we can go to all of these other companies and give them better stuff to bring to nonprofits, just kind of go across the sector and make everything work a little better. And then on the crypto side, they're like, we are plugged into every corner of the global economy. And like one of the big payment companies, we want to work with all of these major crypto companies and do what you're doing in the nonprofit sector where you partner with everybody and bring that across the for-profit sector, like crypto acceptance and utilization. So those are the two things that'll branch out of this, but they're throwing a lot of, match dollars and resources and campaign stuff around our crypto philanthropy ecosystem, using that as kind of the opener, both sides of that fence.
Yeah. Very, very cool. I didn't realize you guys had been acquired just 2 weeks ago. That's exciting. You're happy with it 2 weeks after the fact?
100%. Yeah, it's not.
100%?
Everyone was rattled, of course, because like again, like everyone's like, oh, like you go beyond a bees where it's like no, like the terms and everything around it are awesome, but it's all linked to like the performance of us as a company and how we grow this thing, and then like the long term vision plugs into everything we're building out. It like all came with commitments where like we as the leadership are locked in for an extended period of time, and the organization aligned on all of the right priorities. And again, they came in like our two North Stars were like, we think crypto can be the biggest driver of crypto philanthropy, biggest driver of mainstream crypto adoption. And we think if we get nonprofits into crypto, like they can do anything. It can be like the main driver of innovation. And we had like a gigantic company say, hey, would you like to do these two things? And we were like, that was the first blog post we ever wrote, like about like the whole reason our company exists. So yeah, let's do it.
Nice. Well, congratulations. That's very exciting. And you made out okay personally?
We'll see. It's an earn out. So like, it's totally based on like the degree to which we can build what we're setting out to build here. But yeah, we feel great about it. We're where the companies together are heading, and even more than just the acquisition piece. Like I'm excited about being able to build on this foundation of the crypto philanthropy ecosystem and hopefully just take crypto mainstream everywhere and plug our stuff into a hell of a lot more nonprofit service providers.
I can tell just by talking with you that you're really excited, and you have such a cool niche and corner of this whole ecosystem to build off of. That's sounds like a very, very exciting place to be. I'm really happy for you. That's awesome.
We hope it works out. Yeah, and I appreciate it.
So you were in the nonprofit space before you and your partner got this thing going. What was your experience like do you have experience outside nonprofits as well? I mean, what did your career consist of before this?
Yeah, I was a pharmaceutical consultant more or less for like the trade groups like of the pharma industry. So like it was called alliance development, so helping for-profit pharma companies work with nonprofits who are like voluntary health associations, so like an American Cancer, American Heart Association, St. Jude, like those kinds of groups. And like in the early days, very fun because it was just one of those things where like the companies are trying to make money. Of course, a bill could get passed that could hurt their bottom line. And then they just talk to nonprofits more or less. And it's just like, how does this bill affect you negatively? And it's like, oh, that takes our product off of Medicare D, like we're not going to get coverage on that. Like we don't want that shit. So we would just like partner with nonprofits and just go to the hill and be like, absolutely not. And it was fun, exciting. And then opioid crisis was like right after I graduated in 2016. So it was like immediately into this career that I thought was going to be like fun. Opioid crisis stuff was beginning to break out. And then I had to like manage the lawsuit tracker for the opioid crisis for the trade. So they were just kind of like, let us know if people are getting mad and we'll take it. And I was like, I hate this job. This is the worst job in the world, obviously, where it's just like.
People got mad. People got pretty mad.
Yeah. Well, no, it's not even, it was more like, let's to some extent, like make some of this go away. So like within 14 days of like getting that assignment, I had already like exited. So like that was not that fun. But then I ended up going to one of the nonprofits I had worked with as their integration director. They had a new CEO come in a leadership transition, and they were like, let's figure out how to run a nonprofit, more or less. The new CEO was a consultant and I was a consultant. So it was kind of fun to figure out like end to end how a nonprofit operated, how to build like a team of team system around programs and create the right incentives and fundraising, marketing protocols, which is like perfect for what we ended up doing. And then Alex got me into trading crypto. Like within the first year, I'd gotten to that nonprofit, and then the rest is kind of history. So just stumbled into it.
Mm-hmm. That's how all the good stories start, is you stumble into it, right place at the right time, but then you take advantage of the opportunity when it presents itself. Well,
Yeah.
What have we missed, Pat? This has really been an enjoyable conversation to me. I think you're doing really cool stuff with the team over there, and congratulations again on the acquisition. What have we missed? How we have people out there who own crypto or NFTs or other assets that they want to get a nice tax deduction on. Where do they go?
Yeah, I'd actually like in the opposite of self-promotion, I would say like you have a lot of folks who obviously don't have crypto too. Non-cash asset giving in general is great. So like a company we work with sometimes on this is Overflow. There's also, Fidelity Charitable and DAF programs that are connected to the exchanges you're probably working with. Generally speaking, if you're someone who gives money to charity, just look into non-cash asset giving. You want to give your most appreciated assets and kind of back down from there just because you have the biggest cap gains offset opportunity. So like everyone should be like, just get literate on that regardless of what your portfolio looks like. And just always have that on your radar when you're going to give to nonprofits, because you can usually end up giving a little bit more and still saving a little bit extra money. There's that pocket there in between. So it's really healthy and helpful for both sides. If you're looking to give to a nonprofit and you don't know where to start from the crypto donor standpoint, if it's a significant donation at all, like don't go it alone. Just go to like our website. You can find private client services there and just fill out the form and talk to somebody. Like it's as simple as even just saying you want to get connected with an appraiser, an accountant, someone who just does crypto philanthropy specifically. And then you want information on the tax incentive and stuff to read up on, just ping us and we can get you whatever you need. And if you're looking to give to a charity, I'd say hold until starting on Tuesday of next week onward. We're going to have like a bunch of matching campaigns, which can double the impact of your gift. And cool companies will be throwing money in there to maximize how much you can give to them.
Very nice. So you pledge something to your organization of choice. Some corporation out there wants to do something good for the world, will match it up to a certain notional value, I suspect, right?
Mm-hmm. And our impact index funds, those pools of charities, are going to get matched as well for the donors who want to spread it across a bunch of groups. There's a lot of nonprofits that are always kind of, $5,000, $50,000, $500,000 from being able to try a more scalable idea. So generally speaking, I recommend against picking an individual nonprofit unless you've done like an insane amount of research and you really think you've kind of beat the system. Very similar to if you're trying to like flip shit coins in crypto, it's usually better to just get Bitcoin as like an index fund or get an index fund with stocks. I would recommend donors look into that too, just because there's a lot of cool nonprofits who don't always get kind of a bite at the apple.
Yeah, good point. Good point. Well, thank you for taking some time out of your schedule, Pat. This has been great, and I appreciate you and everything you're doing. I think you've got a very bright future ahead of you in this space.
Thanks, Grant. I appreciate you having me on. This was a fun conversation. We had a lot of stuff I don't normally get to talk about, so thanks for the questions.
Yeah. Well, thank you. I prepped and tried my best. All right. Well, until next time.
Thanks for tuning in to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Be sure to subscribe to the podcast on iTunes, Google Play, or wherever you digest podcasts to ensure you don't miss out on future episodes and announcements. And feel free to submit questions to growmoneybusiness.com.